Afternoon, everyone, and welcome to the Pearson Ham Group quarterly pet insurance webinar. Welcome to everyone who's never attended before, or else regular attendees, back again for another quarter. So today I'm going to take you through the second quarter of 2025, Pearson Ham's pet insurance price tracking data, the trends we've seen in the market, and what that means for incumbent players in pet insurance. Nice. So let me begin just by giving you a bit of background on Pearson Ham. If you're not familiar with us and our background, so Pearson Ham is a pricing consultancy. We specialize in pricing. We have a market tracking over several insurance different sectors. We use this by running details through price comparison sites and using that to collect pricing information that comes back. So we are pricing specialists. Which means that we have experience in understanding what is realistic pricing trends. We are able to recruit genuine consumer panels to collect the quotes. We apply data cleansing rules to refine the information that we get back and provide you with accurate market tracking data. So our insights, if you're familiar with them, are across 5 different insurance sectors at the moment. We started out with car and then home. We launched pet insurance, and then there is also travel and van. You may have spotted in the media as well, we are developing insurance tracking for landlord insurance as well. So it's unlikely that there's a crossover, but if you are interested in learning more about that, feel free to reach out through the Pearson Ham website. Excellent. And then just to highlight once again, the data that we're about to look at, that is based on quotes generated from real people's details. So we have consent to use their details. We can input that into the journey. So if there is credit checking that is a factor in pricing, the people that we're running will be able to pass a credit check. And everything is done with consent. We have agreements with the comparison sites to run quotes. So we never run quotes through sites where we don't have permission to web scrape. Excellent. So with that out of the way, let me kick off at what we've seen happening in Q2 of this year. So the top 5 prices collected, the average monthly movement we've seen for the last 3 months has been consistently negative. This is the top 5 prices with cover starting from 1K for lifetime pet insurance. So it's sort of between 0.7 and 0.8 decreases month on month for the last 3 months. So that amounts to a minus 2.4% change in the top 5 average over the last 3 months. How you look at that if you compare that year to date. So those of you that were here for last quarter's webinar, we actually reported a small increase for prices. So it looks like the decreases that we've seen in this quarter have cancelled out those that we picked up in the last. So it sort of essentially nets out to 0 change in prices year to date. We're essentially back at a pricing level that we saw at the start of the year. And then how that looks year on year. So we're premiums down still year on year as well, so about minus 2.7. We had a little bit of fluctuation back in last November. There was quite a strong decrease from a few brands in November of that month that dragged the index right down. And as you can see, since then, it's been sort of small monthly changes, some increases, and then more recently some decreases. But if I split that out, so like I say, the previous index, that is just based on cover from all levels. So prices returned starting from the lowest level of vet cover for lifetime. That is this blue line here, 0.97. If you were to mimic customer behavior, if you're filtering to higher customer cover levels, so starting from 2K, 3K, 4K, etc., we can see that the top prices for those higher covers have actually been decreasing at a sharper rate over the last year and year to date as well. So those small increases that we picked up in Q1 really only applied to 1K cover. Actually, for the higher cover levels, premiums have been dropping pretty consistently since the start of the year, with actually quite a strong decrease in June. And then looking elsewhere at other cover levels, say we're mostly focused on lifetime cover here as the most popular form of pet insurance. But other types of cover, you've got maximum benefit and time limited cover as well. Looking at how prices have moved there, that's a little bit different to what we see on lifetime. There hasn't been so much downward pressure, and we see prices have generally consistently trended upwards over the last 12 months for time limited and max benefit. And then going back to lifetime 1K cover as well, so splitting this out between different animal segments as well, different customer segments. So we can see if we're splitting by animal age, decreases have been a bit stronger for animals aged 4 to 6. So you're looking at nearly a 7% decrease for that segment year on year. The smallest decreases have been for the youngest animals, so animals aged under 1. We do see decreases there, but year on year, only 1% compared to, was it 2.7% was the average. And again, looking at the difference between cats and dogs, so generally they do tend to mirror each other. They tend to follow prices between cats and dogs, pet insurance pricing. We have seen, though, in the last quarter that dogs have been actually decreasing at a slightly steeper rate than cats. So while they were in line with each other in March, dogs have dropped down by 3% year on year versus 2% for cats. And then also animal breed as well. So the strongest decreases have been on mixed breeds. That will be mongrels and moggies, no particular breed for the animal. They have fallen at the sharpest rate year on year, about 5%. If you're looking at crossbreed animals, so a mix of different breeds, they have actually seen a small increase with pedigree somewhere in between. So we actually have seen insurers maybe putting a little bit of rate in or adjusting their models when it comes to crossbreed animals versus sort of non-breeds at all, where we've seen prices drop the fastest. And then also just throwing in there by region as well, we do see some differences in pricing, generally low for the last quarter. We've seen most regions have been aligned. This would be maybe more to do with the provision of vet services in different regions, whether there's sort of localized pricing that needs to be taken into account. But certainly for the last quarter, generally we've seen most regions move in line with each other. Year on year, we've seen east of England had the most rate out. Northern Ireland, I think, where you've got possibly fewer insurers who are prepared to underwrite for that area. They've seen a smaller decrease. They're generally flat year on year. So if we were to break down into different providers, how they've behaved over the sort of year to date and the last quarter, who are the leading providers at different levels for lifetime cover? So we're looking here at how frequently is a particular brand appearing in the top 6 ranks for the quotes that we run. So this will be, if you're familiar with market share in pet insurance, you'll probably be able to guess which ones insurers 1 and 2 are. So they are almost all the time appearing somewhere within the top 6. About sort of less than 1 in 10 quotes that we run don't have insurer 1 appearing in the top 6 ranks. If you look at their year-to-date price movement, though, so how they've been changing premiums over the course of the year, very little change from insurers 1 and 2, about a 1% decrease since the start of the year. Now, if you were to up that to other cover levels, obviously, if you're going from the absolute lowest level of cover, you're almost certainly going to be swamped by insurers 1 and 2. If you start to filter, though, up to higher cover levels for lifetime, you see other insurers start to come into the mix, appearing more frequently in the top 6. So this is cover from 2K. You've still got insurers 1 and 2 in there though, but you are seeing other brands moving up. You can see the change in rank versus the start of the year. Insurers 11 and insurers 6 are both 8 places higher than they were 6 months ago. And you can see with that, you're starting to introduce some quite strong price reductions in there as well. So decreases of more than 10%. So the sort of the stronger the rate comes out, the more likely they're going to be up there, appearing in the top 6 when sorted by price. So you can start to see there's sort of quite a few large numbers that we're looking at, large decreases in this column. If we go up to the 3K price mark, that's when we really start to see a lot more from insurer 11. Again, we saw them on the previous slide, having taken a lot out since the start of the year. So the rank change is 37 ranks. They did not rank in the start of the year. So they've moved up from essentially from the bottom to now being the 3rd largest for 3K cover. So insurer 1 is still quite a chunky share. They're appearing in the top 6 ranks. 4 out of 5 quotes that we run, but we're starting to see more from particularly from insurer 11. If we move to 4K, this is where it becomes most dilute essentially. So sort of between these top 3, maybe even the top 4, they've got quite an even share. In fact, insurer 11 is only 3 percentage points off being the 2nd largest market share, and 12 percentage points off being the largest overall. So you can see this is probably its strongest segment is that 4K product that this insurer is leading with. And lastly, if we look at the higher levels of cover, so for customers that need at least £5,000 worth of vet cover, again, you can see there's quite a few names in here that you've got increases in rank versus the start of the year. So we've changed the product ordering over the last 6 months. And in particular, you can see here again, you've got those year-to-date decreases, some really, really strong ones there. So it is something to bear in mind. I think this probably ties back to where we've seen decreases really happening in Q2 is this sort of an undertone really, I think, of increasing competition. You can see there's quite a few insurers here who have much less market share at the start of the year, but with some really aggressive decreases. We've seen them increase their share of top 6 ranks. And it's not necessarily new brands to the market, but it is existing brands sort of cutting the prices of their cover. We've also seen quite a few brands as well just increasing the number of pet insurance products that there are as well. So maybe sort of a year ago, any one brand might have a 2 and a 4 and a 6K lifetime cover. Now we're seeing a lot more products appearing in our tracking where you've got brands that have maybe 4, 5, 6 different levels of cover for pet insurance. So it definitely seems that sort of while we're having not much in the way of external pressure on the pet insurance industry, the sort of the CMA investigation that we've covered in previous webinars has been sort of largely quiet for the last year. So external pressures aren't really what's driving that decrease. I think what we're seeing is these sort of incumbent brands that we've got here, insurers 1 and 2, that are consistently the largest market share, are seeing other insurers moving into that space, taking rate out. We're seeing a lot of insurers trying to challenge that dominance from those leading brands that we've seen over the last few years. And then just a bit of context as well, just around news stories that we've picked up on in the last quarter. So you might have seen a few of these already out there in the press. One of those is the ABI releasing pet claims data for 2024. Slightly old news. We are halfway into the year now, but we're sort of looking back at pet claims that happened last year. So obviously, again, we're talking record levels of claims over $1 billion, which is the 3rd year in a row now that it's been more than $1 billion paid out in pet insurance claims. So that is a 4% increase on 2023 and double what it was a decade ago. So 2015, pet insurers were paying out half as much in claims. Claims costs versus last year as well has also risen, as you'd imagine. It's about 3% increase. So sort of the average claim is now $685. Lovely. And then just to finish up with as well, we've got sort of market news as well from Admiral too. So Admiral, you followed, obviously picked up on RSA's personal lines last year. So they took on the More Than brand. So we've seen for just over a year now, actually, they've been migrating More Than's policies. More Than used to be quite competitive for pet insurance. So they stopped quoting on the aggregators More Than last August. So we've started seeing them appearing again on the aggregators this May. So there's a sort of hiatus where you don't see More Than pet insurance, but they're now writing new business. And I think this is obviously part of Admiral's strategy to drive pet insurance. They're also looking to push forward with travel as well. So I think there's an interview in the Insurance Post where the CEO of Admiral is looking to become a sort of a top player in pet, I think, with Admiral and More Than, potentially including pet and travel into multi-cover policy as well. Obviously, they're quite dominant in pet and home. So I think that becomes with an overreaching strategy to bring travel and pet into multi-cover as well. Excellent. And that brings us to the end of the slides. So an interesting quarter, a bit of a contradiction on what we saw in the first 3 months of the year. I think it'll be interesting, particularly sort of with that bit of news from the ABI about increasing claims costs, which I doubt has decreased as we've come into 2025, how that's going to play out, I think, over the next 2 quarters towards the end of the year and into future years. If we're still seeing claims costs going up, but we're starting to see insurers increase competition, I think, in pet insurance, and that's seeing different insurers having to take rate out in order to remain competitive. So it'll be interesting to see how long those 2 factors are able to balance out, whether we're still going to see premiums dropping from increased competition towards the end of the year, or whether there's going to be a point either in the short or long term where that increasing claims cost is going to balance that out. But I think we'll have to wait until next quarter to see. So thank you all for joining. It's really been great having you here. I'll make sure the slides are sent out afterwards as well. So if you have any questions off the back of that, feel free to drop me, Frances, a line, or my director, Stephen Kennedy. But if not, I will hopefully see you next quarter for the next webinar.